In the age of AI, generative AI, AI applications, AI generated content and all of that, there is one specific company that I thought would benefit quite a lot. I know it's quite strange because when we talk about Adobe, all we hear is that, well, ChatGPT, Sora this, Sora that is going to destroy the business. But is it true? Is the business doing financially worse today than before? Or is it just that the stock is down because of the uncertainty around their AI monetization strategy? Let's discuss Adobe in this video. Right now, Adobe has a market cap of $187.17 billion and a forward PE of 21 times. Over the last 5 years, the stock has underperformed. It's up 24.5%. Year on year, the stock is down 28%. And in the last 3 years, the stock is also down 17.4%. Now, if we look at the expected growth rates for this company, sales growth around 10% in each of the years, EPS growing a little bit faster than that. And currently, the average analyst price target sits 33.74% higher than the price we're at today. So is there an opportunity here with Adobe? Let's discuss that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we'd really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Adobe is a company that, well, has exceptional management. In my opinion, they do care a lot about shareholder value. Over the last 10 years or so, shares outstanding have come down by 12.65%. Free cash flow per share, as you can see, has exploded over the years. Looking at some pricing metrics after the recent dip, we can see that for PE, EV to EBITDA, price to sales, price to free cash flow are all below the 5-year mean. Price earnings to growth sits at 1.4, which in my opinion is definitely not on the expensive side of things. And by the way, you can do all of it on Coifin yourself. There's a link down below. So we've seen the expected growth rate for sales and EPS, but what about free cash flow? Well, free cash flow in fiscal 24 grew 13.4%. In fiscal 25, that's expected to grow 17.2%, but then we see a decrease in the next 2 fiscal years, with free cash flow only growing 6.6% in fiscal 2027. Looking at the last 7 years, revenue growth for digital media, digital experience, publishing and advertising, product revenue, and services and other revenue, we can see that the fastest growing segment is, of course, digital media. That's subscription revenue that has grown at a compound annual growth rate of 19.4%. Then we've got digital experience that has grown at a CAGR of 17.7%. Publishing and advertising only grew overall 9.3% from the fiscal 2017 number. Product revenue is actually down 45.39%, and then services and others is up 29.75% since 2017, but well, way lower than the peak here back in 2019. But all in all, if we focus on the largest segments for Adobe, we can see that digital media ARR has grown 67.8% since the November quarter of 2020. Looking at Document Cloud annualized ARR, that has grown by 135.75% since that same quarter. And then Creative ARR, that has grown by 56.43% since November 2020. Of course, they've got a huge push from the pandemic period, but we can see that growth still continues after that as well. And then if we look at RPO, remaining performance obligations, I mean, a struggling business would have seen RPO come down. In this case, we're still going up. Of course, the big question still is, what about monetization when it comes to the AI credits, right? In this new day and age where you've got so many new AI applications, how are they going to monetize these types of things, right? When you've got ChatGPT, Grok, Midjourney, even Gemini, all of them have their image generation models, right? Adobe has Adobe Firefly. But inside the Adobe ecosystem, you've got AI credits. Have they figured out a monetization strategy? It's been a couple of quarters already since they introduced it. I think 2025 is the year where the market really wants to see some results. I use Adobe, I pay for it. Do I use AI credits? To be honest, no. But then again, I'm just one person. They have millions of users. So remains to be seen what happens with that. But has the stock taken a big hit to justify, let's say, the current price, even though you've got some questions that need answers? Maybe so, maybe so. If we do a quick reverse DCF here, we plug in the trailing 12 months free cash flow, we can see that based on these assumptions, we can see that the implied growth rate for free cash flow to justify today's price is approximately 5.9%, meaning Adobe needs to grow free cash flow by 5.9% each year for the next 10 years. Is that achievable? I think it is, although we've seen that in fiscal, 26 or 27, free cash flow is only expected to grow 6.6%. But of course, the expectations right now are quite low for a company. And even with that 6.6%, this is 5.9, so it's already a bit lower than that. Then looking at the stock right now, we can see that last week we've seen a nice green candle, nice rebound. RSI was very, very close to being oversold on the weekly. On the daily, we were oversold. So this might be a signal that, well, suddenly the buyers came back in. We're still under the moving averages here, still under the 20, the 50 and the 200 day one. This was the uptrend line, which it previously did respect back when we dipped here late May, beginning of June. But then the last earnings report, where we've seen the big, ugly red candle that took the stock under it. And well, we've been going and basically we did rebound just above the $400 mark. So all in all, I think Adobe is still an amazing company, a company that is very, very much profitable, that cares about shareholders. Some will say, oh, they care more about shareholders than their customers with the terms and agreements and all of that, the use of content. I know the whole story, but we're purely talking here about the stock. And again, the data doesn't lie, because if we were here in a sort of delete Facebook type of environment, we would have seen the business get hurt quite badly. So far, I don't see, well, any signs of that happening. So yeah, if you are an Adobe shareholder, I think this might have been a good, or still is a good buy the dip opportunity. Although I would still like to hear about the AI credits monetization story and how that is evolving. So I would say maybe a hold right now and see where it goes. I know some will say, yeah, but then when they tell us the good news, the stock will already bounce. Yeah, that is true. But what happens when they don't tell you the news and you bought? The stock is going down. It's much better to buy a company that provides you with good news and you got more data, even if you have to pay a higher price, let's say, because you're more comfortable buying and you're more comfortable holding, if that makes sense. So all in all, that's about it. Do share your thoughts down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.